Hello traders and welcome to another video review. Today is Friday, October 14th, 2022, the last day of trading for this week. So let's dig into the Forex calendar. London session, we don't have too many data scheduled for release. We got only some speeches from the German Buba Maruder, and then of course we got data from the Eurozone trade balance, and at the noon we got the start of the Eurogroup meetings. During the New York session, the most important data are in the form of the retail sales and the sub indices of the retail sales, like core retail sales and so on. Business inventories, Michigan consumer sentiment and expectations, and US Barker Hughes oil rig count. So those are data scheduled for this during the New York session from the US, from the Canada manufacturing sales and wholesale sales. As you can see, plenty of speculative net positions. However, those are not that much important for our analysis. So there are some data here scheduled for release. It might be kind of a busy session. However, our London session is looking very poor in data. So maybe let's switch just back to the chart. We are going to start with Euro. Euro dollar 4-hour chart, bullish engulfing pattern on this time frame. We broke below 61% substantially, 9,713. This is the level. The low was 9,634, so it's like 80 something pips lower. Okay, so definitely the Fibonacci didn't help in that situation. We can move our technical support to the swing low. We got a bullish engulfing on a 4-hour chart. However, please notice the fact that that might be only the one-off, let's say, occasion or price behavior, because it still doesn't mean that we will have a rally here. However, it is possible. Why? We are above the 30 periods moving average. Okay, this is so-called local trend line broken, right? It's clear it's broken right now, and of course this is not necessary right now. We can rally higher. We can rally higher towards the next target. One of them was hit already. This target is 9,811. Okay, so as you can see, pin bars here, pin bars here. Let me just zoom in a little bit. There you go. Those levels that I'm playing with now, 9,737, 9,751, are technical supports, together with 9,669 and 9,634. 9,811, 9,835 are technical resistance, and they need to be violated in order for this market to move higher, of course. And on the other hand, if we put Fibonacci retracement tool from the top to the bottom, you can easily see that we retraced over 38% and almost 50% of the recent downwave. So on this situation, we are just sitting below the level of 50%. Let me just put my Fibonacci to the top, and it's much more visible now. 9,819 is the level. Okay, so it's here, just in the middle of this zone, and 9,864 is the 61% Fibonacci retracement. So pretty much nice setup. If we break above this zone here, the parity is again the target for the US dollar to the American dollar. Let's find out what's going on the pound. And this is very nice setup here on the pound. Please take a look at this. Our analysis was spot on, just where the zone is. The first one was here, but there was a big candle here. The second zone was here, and that's a nice bounce just as expected. So where should we go? Well, first thing is that we should test at least the level of recent high, which is 1.1496, of course, and that will be 11% from the bottom at the end of the September. Very nice breakout above the 30 periods moving average. This is 4-hour chart, please remember this. Let me just make it a little bit bigger. There you go. So that means we are now trying to rally higher. Momentum is positive, momentum is strong, high probability of testing all of these technical levels. That level is no longer necessary. We will use it as a technical support, local technical support, 1.1224. So that's the level of a local technical support on British pound to American dollar. Outlook remains bullish, and maybe it will be made very soon, this impulsive wave, because it looks like 1 2 3 4 5 to the upside, correction 1 2 3 4 5 to the upside, zigzag pattern here, right? So what we have here already in terms of the Elliott wave is from the bottom 5 wave advance in wave A, correction in wave B. We are waiting for the wave C. I will make it like a bigger, maybe there you go, ABC primary cycle. Okay, so this is what we are waiting for right now. It looks like we might get this kind of a structure. So that's everything about cable. Let's take a look at the US dollar to the Canadian dollar. Okay, why? Because we got something interesting here. ABC didn't work. We got that situation here, very interesting. We got bearish engulfing pattern. That's a 4-hour chart. Let me just switch to the daily. Maybe we'll be there. You go. This is a bearish engulfing, of course. Yeah, another push to the upside into the extremely overbought market conditions. So what we have is apparently bearish divergence, big pin bar. This is a pin bar that needs to be addressed. There you go. That big pin bar with the high at 1.3976 might be the end, at least, of this recent move to the upside. The market is still trading above the 30 periods moving average. Fine. The level is now 1.3473, let's say. We are trading above the local technical support, 1.3711. However, it looks like we will abandon this let's say up cycle very soon, because the next technical support is around here. There is the level of 1.3499. okay, and of course the momentum is still positive. However, it's pointing to the downside after the big sell-off on this bar. So if we just zoom in, okay, we can see clearly right now that the market might want to test this zone here around the 30-day moving average, 1.3421, 1.3392. So please focus on this zone for today and for the next days, because it looks like the market wants to get there. And if we talk about the Canadian dollar, we need to talk about the crude oil. And on the daily time frame chart of the crude oil, we can clearly see that the recent breakout from the falling wedge stopped directly on the lower boundary of the supply zone. Again and again, this zone cannot be broken by the bulls. We have 3 days of the down move towards the local zone, support demand zone, or the local support zone, 86.51, 85.80, 84.92, and of course 30-day moving average is very close to the recent green candle. So we almost tested the level of 50 on the error side, the neutral level. We are trying to bounce higher, and if this bounce is successful, then the projected target for the crude oil is located, yeah, let's say this is the low, so the projected target is located at the level of 102.76, so it's above the zone. However, there is one more, let's say this. Okay, that's the extension level. So then the wave A will be equal to the wave C, right? This is wave B, so we are waiting for the target of the wave C, and we might get even the level of 102.76. So that's the current outlook. However, please notice the fact there is a big supply zone ahead of us, 93.73, 98.35. That's everything from me for today. Thank you very much for watching this analysis, and I hope I see you guys next time. So take care and bye bye.